we're seeing very substantial inflation. It's very interesting. We're raising prices. People are raising prices to us, and it's being accepted.
It's no surprise that the US is currently going through a 40-year high inflation, and everything costs tremendously more. The current inflation rate is over 8%, and the Federal Reserve's goal is to keep it closer to 2%. So the Federal Reserve is now artificially slowing down the US economy by raising interest rates. In June, we had the highest interest rate increase in 18 years, and these rate hikes makes borrowing more expensive to borrow for a car, home, or even to expand your business. So today in this video, we are going to be talking about two of Warren Buffett's major advice to beat and thrive during this inflationary period. You see, inflation and recession is unavoidable. It's normal. It's usually a bump on the road to adjust our economy and materially slow down of growth. If history is any indication, in 2008, we had the last recession, but we have been thriving ever since. So without me rambling anymore, let's look at two of Warren Buffett's major advice to how to beat this inflationary period. So first, let's look at the first advice from Mr. Buffett to recession-proof yourself.
By far as anything that develops yourself. The best thing you can do is to be exceptionally good at something. If you're the best doctor in town, if you're the best lawyer in town, if you're the best whatever it may be, no matter whether people are paying you with $1 zillion or paying you, they're going to give you some of what they produce in exchange for what you deliver. If you're the one they pick out to do any particular activity, whatever abilities you have can't be taken away from you. They can't actually be inflated away from you.
So basically in this clip, the 91-year-old Buffett is saying, be the best at it. Either you have a job or you're running a business. Become the go-to person for that product or services. If you currently have a 9-to-5 job or any other job, sharpen your skills to stay relevant. So if it's a product or service that your company is providing, be very familiar with it and learn everything there is to learn about this product. So you're basically creating your own ecosystem where you know more about this product or service than anyone else within your group. So in the unfortunate event, if your company wants to reduce workforce to save money on payroll, they are least likely to cut your job if you are the go-to person for that product or service that they are offering to their customers. The worst case scenario, if your company doesn't have to fire or let go of anyone, at least now that you know more about this product or service, your manager will start to acknowledge that, will start to see that performance. They'll see the new skills that you bring to the table. So you'll end up with a raise or the next promotion will come sooner. But I'm sure you're thinking, dude, it's probably easier than said than done. Yes, it will definitely not be easy, even if you have to learn new skills by spending your nights and weekends to learn these new skills to become the very best at that product or service. You can learn almost anything these days online with various different sites like youtube.com, udacity.com, udemy.com. All these sites has content for free to low cost. Even I have taken a bunch of classes on these sites where I'm constantly trying to improve my skills. So once you sharpen your skills, reach out and have a conversation with your manager and talk about the new skills that you have learned. And feel free to ask if you can take on any additional responsibilities, which is a great way to recession-proofing your own job. So now let's look at Warren Buffett's next advice, how to invest during inflationary period and profit from this economic downturn and stock market recession. So I'm sure you already know that due to high inflation and high interest rate, people are spending more money on their mortgage, rent payment, food, and their everyday essentials. So they have less disposable income to spend on non-essential things like Netflix, latest gadget, putting off buying a new car, and maybe even delaying the next iPhone upgrade. So now let's say if you invested in Apple stocks, as consumers start to delay their iPhone upgrades, that means Apple sales start to slow down. And as the sales start to drop, that means the stock price will start to come down as well, right? So how do you protect yourself during these rough, turbulent conditions? Well, to answer these questions, we're going to listen to Buffett's next clip and analyze it on the other side, where he'll talk about two major points.
Well, the businesses that will perform the best are the ones that require little capital investment to facilitate inflationary growth and that have strong positions that allow them to increase prices with inflation. We have a candy business, for example. The value of the dollar since we bought that candy business has probably fallen 80 to 85%. That candy business sells 75% more pounds of candy than it did, but it has 10 times the revenues and it doesn't take a lot more capital. So that kind of a business has enough freedom to price to offset inflation and doesn't require a huge investment to support it.
So in this clip, Buffett talked about two major key points to pay attention to when you want to invest in the stock market during high inflationary period, like what we're seeing right now. First, he talked about investing in businesses that doesn't require high amount of capital to grow during inflationary period. The second businesses that he mentioned was businesses that has pricing power, businesses that can increase power without reducing demand for their goods and services. So let's use Apple as an example here. This is a company that already has the infrastructure, the contractors, the R&D, suppliers, and the Apple stores to sell these goods and services. More importantly, they have way too much cash on their balance sheet. This is a company with the healthiest balance sheet we have seen in any other company in the history, period. Apple currently has over $200 billion in cash reserve, and Apple is bringing more money than they know what to do with. So this is a company that will not require any new capital in order for it to grow during high inflation. They can cash flow their growth. So they will not need to borrow or raise new capital whatsoever, which definitely checks the first box Mr. Buffett mentioned, to invest in businesses that doesn't require a huge amount of capital in order for it to grow during inflationary period. Next, Mr. Buffett talked about investing in businesses that has pricing power, companies that has the option to increase prices for their goods and service without reducing demand. These type of businesses usually have good competitive advantage, meaning these companies are really good at what they do and the product they sell. So their service and product is really important to the customer. They provide goods and services to meet customers' need regardless of the inflationary period. So let's use Apple as an example here again. Most of Apple's revenue comes from by selling the ultra premium consumer products like the iPhone, the MacBook, the iPads, and so on. Apple has iPhones at various different price points, and most of their revenue comes from by selling the newest iPhone, the most premium iPhones, to customers who usually fall under the higher income bracket. So these type of customers are usually least likely to delay their next iPhone or MacBook upgrade, even if Apple decides to increase the price by 10-15%. Now, if you think about it, Apple has been increasing the price of iPhones every single year since 2007 when it was launched, and it hasn't impacted Apple's sales or their revenue. In fact, it helped Apple become the largest company in the US. And this is the power of Apple's ecosystem, which gives them the pricing power that Mr. Buffett talked about. You might think I'm crazy to think Apple has the pricing power. If you need more validation,
We own 5.5% or a little over percent of Apple. It's probably the best business I know in the world. And we own 5.5% of it. And that is a bigger commitment that we have in anything except insurance.
Mr. Buffett's company, Berkshire Hathaway, has 40% of their money invested in Apple. And this is because he thinks this is a company that can thrive and profit regardless of the inflationary period, even if you go into a recession. Look, there's no such a thing as recession proof. However, you can become recession resistant by investing in yourself, learning the new skills, staying relevant, and investing in businesses that has the pricing power as well as doesn't really need any new capital, doesn't need a lot of money for it to grow during inflationary period, like companies like Apple. So by investing in yourself, you are not going to become a collateral damage in the event that your company has to let go of people and reduce their workforce to save money on payroll. So I hope you liked the content. If you did, please feel free to smash the like button for the YouTube algorithm so YouTube promotes the video to other people as well. And if you did not like the content for whatever reason, please let me know in the comment section. Let me know what I can improve and what do you want me to do, and also feel free to dislike the video if you did not like it. So thank you for watching, and I'll see you on the next one.